Patrice, have you sold or recommended perhaps that people should be selling any of South Africa's banking stocks on the back of the Moody's action?
No, not at all. Really, this downgrade comes on the back of the downgrade that we saw to the South African government bond rating. So it's just a mirror of what we've seen in the bond market, and you have to remember that a large portion of the bank's capital in South Africa are invested in South African government debt. So it's just a follow-through of the downgrade that came through in September on the government debt, and we don't see as such cause for concern. I mean, as you mentioned already, it is a downgrade to the foreign currency deposit rating of the banks, and you have to remember that most of our banks rely on local deposits, not foreign currency deposits, to fund their assets. So it's not as big a concern as one would think, just reading the headline.
Yeah, so do I hear you right to say that it really doesn't matter what Moody's is doing, and besides, they were behind the curve anyway?
Well, I think one can take a bit of a cynical view of credit rating agencies, that they tend to be behind the curve, and you tend to find that financial markets discount risk a lot quicker, and that was quite evident if you look at how equity markets reacted to this downgrade. It was really shrugged aside, and no one really was concerned by that downgrade. So I wouldn't say that's any cause for concern.
Yeah. So Patrice, you're saying that if we had not carried this story here at CNBC Africa, you really wouldn't have worried anyway. You'd have continued watching us regardless.
I would. I think there's always interesting viewpoints, and I always find it useful to hear what other participants in the markets have got to say.
Now, when we look at the South African banking environment, we know, of course, there are a number of issues that the banks are battling, and we know about the foray into the unsecured lending market. From where you stand, give us a sense of the valuation for the banks in the country.
Yeah, it's quite interesting that our banks, if you look at the big four banks, First Rand is the premium rated bank at the moment on a 2.4 times price to book. The others...
Rightly so? Rightly so?
Well, they're the ones with the highest returns on capital, and the ones which have really been doing the best if you look at the results across the big four. And the other three, interestingly enough, trade almost at similar valuations on price to books of 1.6. Maybe the surprising one is Standard Bank, which was the darling of the sector, having derated and now trading alongside Nedbank. Nedbank, which used to be the laggard, has re-rated again on the back of very good performance. So nothing to choose for. And then you have Investec, which is still trading at close to book value, but that's really a story of being rated in part like a European banking stock. And the likes of Barclays are trading on 0.5, 0.4 book, which is a reflection of still a lot of doubt as to the capital position in developed markets of these banks.
So would you be buying Investec?
Well, we like Investec. We think that it is a stock which it has been unfairly tarnished with the same brush as other European stocks. If you look at the history of the bank, it hasn't really traded for a long time at 1 times book. Yes, it has problems in the European space and Australia, but at the current share price, you are getting a fairly sound South African banking business and the asset management business, and you're not really paying for any of the offshore banking business, despite the fact that you might have a view that the sovereign debt problem in Europe might take a long time to resolve. So we feel that that's completely discounted in the share price, and there's considerable upside, especially given that the earnings cycle is probably at its low right now.